For people who want to learn how to trade stocks with success, just remember this. The stock market isn't what many investors think it is. Beliefs surrounding the stock market range from the pessimistic, investing in stocks is just gambling, to the euphoric, the market is never wrong. So, let's take a look. Have you ever heard anyone say that the stock market is rigged or that the stock market is nothing more than gambling? Well, they're wrong. Unlike gambling, the house is on the investor's side. For example, when a stock price rises, company executives holding shares, bondholders, and the individual investor wins. Las Vegas operates quite differently. When the house wins, the individual loses. When the individual wins, the house loses. So in Vegas, the house makes sure that the odds are stacked in its favor. Well, Wall Street tries to do the same, but investors can't avoid those situations. Besides, that's a topic for another video. If the stock market is such a great deal, why aren't you rich? The first problem with this view is that it doesn't define rich. Many people who study the market and invest according to sound rules will generate wealth that they otherwise would not have had. They may not become a billionaire, but they will likely be much better off had they not. The second problem with why aren't you rich is shown by asking a counter question. If you're so rich, why aren't you smart? The two aren't necessarily related. I'm sure you've heard this one. All you need to do is find the next big thing and hold on. Well, there's two problems with this view. First, you need to find a company in the next big thing. That's going to be hanging around for a while. The dot-com bubble is famous for minting dozens of next big thing companies. How many of those companies are still around? Do you remember webvan.com, pets.com, or etoys.com? The second problem is that it doesn't contain a sell strategy. Every great stock ultimately becomes a sell at some point. An investment strategy that only addresses buying is a half strategy. Half strategies seldom work for very long. And this next one is my favorite. Have you ever heard somebody say, you can't time the market? I've heard this so many times, but I think you know my opinion on the subject. And it does bring to mind musician Miles Davis's famous comeback. Many of you may not know who Miles Davis was, but he was iconic for experimenting with harmonies and rhythms and musical improv, and he was very unique. So the story goes that Miles Davis had a performance, and someone came up to him and complained, saying that you can't dance to your music. To which Davis replied, no, you can't dance to my music. In the same vein, good investors know how to read a stock chart to assist in the entry and exit of a stock position. An investor may not hit the exact high or low, but can get close enough to be useful. I've done some interesting research on this subject and have a very insightful video coming in the near future. As a teaser, an investor can miss the bottom or the top by a wide margin and still beat the professionals. But of course, more on that later. And then this statement. The stock market is all luck. In the past, some brilliant pencil neck scholars have made the argument for pure randomness. Ironically, these so called scholars never seem to apply randomness to their own field of study. If the stock market were all about luck, no amount of experience, portfolio management techniques, or study would improve an investor's performance. Yet, virtually every veteran investor can look back at mistakes made years ago that they would not make today. There is a learning curve in the stock market. One needs only to stick to the process. There is nothing to learn in a luck-based venture, so might as well just play the lottery. And then the statement, insiders have too many advantages. In reality, an individual investor has some very important advantages over the pro. The investor can enter and leave a position quicker and with less price disruption. Also, stock information is much more widely available today than it was before the internet. As you know, I love the charts, And I strongly believe that it's much easier today to discover price disparities than it has ever been. Going back to investor psychology, I believe it is much easier to track the herd mentality and then to be an investing contrarian. This is a time tested, profitable technique. And lastly, you've heard this statement: the market is never wrong. This has its roots in the time honored advice not to fight the trend. Generally, that's good advice, but the market can temporarily be wrong. With patience, practice, and sound judgment, exploitation of market mispricing can be made. As an example, while studying macro trends, an investor can often be ahead of where the market is going. My best advice is to set a plan and be patient while the market unfolds in front of you. And so for today, that's ChewDog Charts. Thank you.